I'm very pleased to be able to speak this morning with Phang Yew Kiat, native of Singapore, ex-banker with one of the leading international banks, worked a lot in China and built your international experience in the banking industry, and today the vice chairman and the brains behind the transformation of a traditional Hong Kong listed company into becoming one of the largest peer-to-peer lenders in China, from a $150 million listed company to a $3 billion listed company. Now both stories are just as interesting as the other. Tell us a little bit about your journey, because I think that there are lots of people out there who want to see transformations in their own journey. What skills you acquired as you were working through the network of Standard Chartered Bank where you worked at, and how that prepared you for what you're building now with Credit China.
Thank you, Emmanuel, for inviting me to this interview. Very kind words of your introduction. A small correction. Today, Credit China FinTech is a FinTech group. The way I describe it, it is not just a peer-to-peer lending company, because in the course of the next few minutes, I will be able to share with you a bit more about the multiple revenue streams that we have built in the course of the last 3 years, rather than just a single monoline FinTech company. Yep. Now, I was privileged. I am a Singaporean. After finishing my national service, I went to UK to study, and after my study, I joined Standard Chartered Bank, London, as a management trainee. The journey started from there. Privileged in the sense that in the first 7 years with Standard Chartered Bank, I had a chance to work across multiple different jobs. First in group operations, and then subsequently I was transferred into group electronics banking. This was 20 years ago, 96, 97, and then I have a chance to get into the business analytics of the performance of Standard Chartered Bank Group across 16 countries. This is the point where I've acquired some management accounting experience, and I was subsequently given an opportunity to head up as a CFO for Standard Chartered Bank in Indonesia, and that was in year 1999 and 2000. Subsequent to that, I was given an opportunity to join one of the largest bank in Southeast Asia, and that was in 2001, DBS Group, working for one of the most charismatic chief executive, Philippe Payat, at that time. Learned a great deal from this Frenchman. And during that period when I was at DBS, we had DBS have successfully acquired Dao Heng Bank. So the M&A skills was, there was a lot involved in the M&A activities. There was also a fair bit of skills or exposure around integration or post-acquisition piece. I was privileged in the front line at that point in time, assisting the group chief executive in navigating through some of these challenges.
And then you went off to China.
Then in 2005, I was given a chance to, I was touted with this opportunity
to spearhead a new bank.
That's right.
In Tianjin.
And Tianjin, and it was once in a lifetime opportunity. Many bankers in Asia work in the banks. I've done a bit of M&A and post-acquisition, but to start a brand new bank, a brand new a Chinese bank in China, was one of the rare opportunity that was presented to me, and I jumped on into this opportunity, and I went into China.
Right.
We spent the first year literally negotiating the terms and the condition, and subsequently were only given 121 days to build a brand new bank, and that was called China Bohai Bank. I was after the initial building phase, I remained in the bank as the deputy CEO, responsible for both consumer and SME business.
Right.
And in that 3 years in China, working for a Chinese bank, okay, with foreign partnership, it was challenging, but I've learned a great deal about the operations, the operating environment that is happening in China. That have literally gave me a good knowledge how to navigate the risk environment of lending and across China.
Right. Fast forward to China Credit.
Yes.
Credit China. Yes.
Yes. Fast forward to Credit China. In 2012, I have taken a decision, a conscious decision, to walk away from traditional bank. Initially, I was planning to start a hedge fund business, given an opportunity to do so, but I was later convinced to stay focused with the skills that I've acquired in the previous 17 years to put it to proper use, and therefore to work around the FinTech area. Okay.
Right. But how did the Credit China opportunity come, given that the organization itself was not called Credit China at that time?
At that time, it was called Credit China without the FinTech, and then a Chinese group wanted to build. At that time, we used the term internet finance in 2013. I knew the largest shareholders of Credit China at that time, and I knew him for about 5 years, and he had then invited me to join the board and help the company to transform into the internet finance space. Because a traditional finance company in Hong Kong at that point in time were literally constrained by the amount of capital the company has in terms of making lending in China. So I needed to find a business model, a brand new business model where I'm able to scale up the operations without the constraint of the capital, the pay-up capital in the company. So we look at what was at that time was interesting was a peer-to-peer lending model. Okay, peer-to-peer lending was a model that was founded in UK by a group of financial engineers in 2004. So we were literally picking up that model after 9 years, which we think it was a bit more mature. Okay, but we have then made some minor customization to create an entire ecosystem with not only a peer-to-peer lending website, we also take into consideration of having a mobile payment license to take care of the fund movement between the investor and the borrowers. And then to enhance the entire credit model for investor, we have also taken into another consideration how to give a layer of credit guarantees on the borrower.
Were the credit guarantees and the credit models, were they imposed on you, or you were creating it as you went?
It is a good question, Imelda. It is purely a model which we thought at that point in time is necessary and relevant for us to create scale. It was not imposed on us to have a credit guaranteed layer, but what we thought was necessary at that point in time, and it still serves us well to have a credit guaranteed layer in the peer-to-peer lending space today.
Did you have institutional investors, like the Goldman Sachs, the Morgan Stanleys of the world at that time?
No. Today, we are still do not have that institution investors, but we do have local companies who are putting their excess fund as a lender onto our peer-to-peer lending platform. Today, the institution investor per se, company funds that are flowing to the peer-to-peer matching website accounts for, as of end of 2016, approximately 5%. Okay, we intend to grow that in 2017.
Okay. Was internet finance very website-centric then when you first started, and it became mobile over time? And what was the size of the loans that you've dispersed since then? And I think you've built it into 5 other, in total you have 5 business lines. Just run us through very quickly. Yeah.
So at the beginning, we started the journey in 2014, the transformation, creating the so-called the entire ecosystem around peer-to-peer lending. Okay, so there are basically 5 components. First is the peer-to-peer lending website itself. In the middle, then at the top we have a credit guarantor layers. On the left side, a bunch of investors, the person who lends money, and on the right side are the borrowers. And then we also have the number 5th component, the bottom layer, and that is the payment layer. Okay, facilitating for the funds to move from the investor to the borrower end. Okay, and vice versa when the loan matures. Okay, so this was what was created in 2014. The journey was not as smooth as what you probably see. We started off in first quarter, that is exactly 3 years ago this time, on the 31st of March, we only have 8,000 registered users. And then come June, 3 months later, from 8,000 we grew to 29,000 registered users. And then come end of September, another further 3 months, we had 200,000 registered users. And we concluded our first year end with 1 million registered users. Okay? And that volume scaled up to 5 million in 2015.
So registered user and active user, yes. What was the...
Approximately our conversion ratio was about 45%. 45% of the registered user eventually have completed a transaction on the platform, and we term them as active user.
Okay.
Okay. And since then, that was the strategy. I call that strategy 1.0. We religiously and very disciplined, and we just grew that fundamental business model for the first 2 years. Now, at the end of 2015, taking on some of the policy introduced by the Chinese government, at that time, Premier Li Keqiang introduced a term he called Internet Plus. And the term was used around where the government is actually encouraging many of the enterprises to start thinking about how to leverage on the power of internet to help company to introduce new business model. Okay, borrowing on that thoughts, I have then gone to Credit China board, and I've told them, actually, if we start looking at our current ecosystem, what is most valuable in the internet ecosystem for peer-to-peer lending is actually the payment gateway.
Yes, it completes the loop, right?
Correct. And the payment gateway, it is an important and essential element. The way at that time I presented to the board was all activities that is happening across the internet can basically be divided into 2 categories. The first category is information exchange. We're talking about website searches, we are talking about email correspondence, we are talking about social messaging, etc. That is information exchange. And the second type of activities is value exchange, where you buy something over the internet, you order a product or a service over the internet.
And there you're going into supply chain type environments where...
That's right. But more importantly, you will always end up having to make the last part, to make a payment for it. That is where it comes down to the payment.
Yeah.
And therefore...
And what is the ecosystem that you created as a result?
As a result, then I've told them that it is important for us to look beyond the peer-to-peer lending circle, and taking on that, we have missed out a big portion, and that is the gaming payment opportunity, social gaming payment opportunity. Now, China today has a gaming market estimated at approximately 150 billion renminbi.
Right.
Okay, people who play computer games. That market size is 150 billion renminbi market size. We have missed out on e-commerce. We don't have resources to engage in that space, and none of the e-commerce operator were keen to work with us because we started in 2014 as a very small base. We don't have user. But come end of 2015, we have 5 million registered users. This is where it becomes interesting.
Yeah.
And some of the smaller e-commerce websites would want our payment gateway so that we can direct some of our clients to complete the purchase of an e-commerce item over on their website.
Right.
And then we have also missed out on an element that is making bill payments, a telephone top-up, okay, a utility bill payment, etc. So and so on and so forth. So across that space, then what I've convinced the board is to allow us to upgrade our strategy from 1.0 to the next level, and that is to start to build our capabilities beyond peer-to-peer lending. And so in the year 2016, we have done 5 acquisition transactions. The first thing we did is we thought we want to deepen the space in payment. We bought a mobile post company, okay, that uses mobile post payment technology. That was the first company that we bought into. The second company that we bought into, it is a relatively new startup, but successful social gaming company,
right,
designing computer games.
Right.
All right. And the third company we bought into is a consumer lending company.
Right.
And this consumer lending company, consumer finance company, have the capability of processing a nano loan, okay, all in the spans of within a minute.
Okay.
Okay. And then we also concluded the fourth acquisition, and that is extending our offering beyond China's shorelines, and we have acquired a payment processing company in Vietnam. And the last acquisition that we have, JV acquisition that we have gone into, is in blockchain technologies.
Right, and that's the fifth. There's a sixth almost.
That is the fifth, but the original business that we have in traditional lending remains, and that was altogether 6.
So let's just examine the whole idea of extending credit to the unbanked population in China. So because of your structures so what you've been learning in terms of building a lending business is that you started it off as a internet finance business. It became mobile. You had good relationships with key logistics type industries, supply chain type industries. One was a juice manufacturing company, and another was a
Mobile phone distributor.
And through these two, you actually plugged into a network of distributors, and at the end you have got several 100,000 small businesses.
Correct.
That were your original borrowers of your microfinance or your internet lending model.
That's right.
How many small businesses are there connected in that way? And does this model provide the kind of certainty in the lending business that is similar to the credit score based approach that banks take?
Let's start off to talk about today Credit China FinTech (CCF) as a company. We have two types of lending. That means we lend to two groups of borrowers. One of them is the SME owners. Now, traditionally, the bank would take the financial statements and then send the relationship out to assess the performance of the company, come back, write a report, etc. Now, I have found that this approach is fairly limiting in the way of creating scale. And therefore, we have taken a conscious decision that we only lend in the industry where we understand. And so we have decided, and as you have described, we have then went partnership with one of the largest fruit juice producer in China, Huiyuan, and we signed up with them to work through an arrangement where we create a joint venture company where they will be able to share the ERP information which relates to their distributor in Huiyuan fruit juice. Now, Huiyuan fruit juice, as a largest fruit juice producer in China, they have more than 8,000 distributors. Now, each of the distributors on a regular basis buy fruit juice from the manufacturers and then put them at the retail shelf. And at the end of it, they may go back to the retailer in 30, 60, 90 days time to collect the money.
Right.
Okay. Now, many of these distributors are relatively small and they don't keep a proper finance record of the company because there's a proprietorship.
Right.
And it is difficult for them to go to a bank to borrow money. Now, our decision on credit lending is taking a new approach. We do, apart from applicant scoring based on their background, we also do what we call a behavioral scorecard. Okay, based on the distributor past years of purchasing records from Huiyuan, we are able to analyze their buying behavior. Then we will know actually this proprietor who is a distributor, how much effort is this guy putting on in the business that he's
okay. So what is the size of the loans that you distribute through this way, and do they come into a branch, or do you actually disperse the loans immediately and directly into a bank account?
The model have evolved. Okay, in total, in 2016, collectively together with Huiyuan, we have dispersed a loan of up to 4 billion renminbi.
That's about it's about 700 million US.
4 billion renminbi. Let's put it to be approximately 600
million US dollars.
Yes,
Okay.
yes,
Yeah. Go on.
yes.
And how many of them are, and per ticket item? Per ticket item, as in per.
It varies. It varies depending on the volume that some of these distributors is buying. We typically do not fund the proprietor 100% of their business. That itself, in our opinion, is too risky. We typically fund up to between 60 to 70% of their turnover volume in a particular month. Okay. So then there is ownership from the entrepreneur, from the proprietor, to ensure that he's focusing on delivering the
right. But what are the sizes like? Just
typically a million.
A million renminbi, okay.
Yes.
And that would be about
less than 200,000, say.
200,000 Singapore dollars, but US dollars would be
about 150,000 US dollars.
Okay, but it's sizable. That's enough for. And how is it dispersed? How is the money?
So we typically raise the funds through a peer-to-peer matching platform, and once the lenders have accumulated to the borrower's requirement, the fund is then dispersed to the. Typically, we will give the credit back to Huiyuan Fruit Juice directly to manage the risk.
Which, I mean, the fund is distributed to Huiyuan, not to the...
To Huiyuan, and then thereby allowing their distributor to draw down on their stocks based on the purchase.
Okay.
Okay? So that the funds is not flow into the wrong area.
Okay.
That is another layer of...
Okay. So essentially you are Huiyuan's credit, supply chain credit facility in that way. But how's that evolving? Because over time you're going to understand more about the business, the small business themselves. So, and they would be coming directly to you for loans, for other things that they might want to do.
So far, we have remained to be fairly disciplined. Okay, there's a lot more that we could do.
Right.
But we have chosen not to go beyond this particular business model as of today.
Okay. So there are two industries that you understand well: the fruit juice people and the phone distribution people.
Mobile phone distribution.
Right, and that gives you an ecosystem of how many small businesses?
Probably today about 3,000 of them.
3,000.
We lend to 3,000 of this enterprise.
Right, and the total assets being created?
In that whole space, approximately in total in 2016, about $1 billion US.
Right, and there's a payment component to that. And what's the size of the payments that you see, payment flows that you see?
That is interesting. The payment flows is getting bigger because our payment gateway now offer a direct solution to people like Huiyuan, etc. Because our payment gateway is directly plugged into the ERP system. In the past, just imagine for a moment, the distributor will place an order through the salesman of the account managers working for Huiyuan or working for Aishida. And then the next thing is they will generate a purchase order, and these guys will need to take the purchase order, go to the bank and remit the money to the bank. And we have shortened the entire process by creating an apps, allowing the distributor to actually make an order on their mobile phone in the comfort of their office or home, or wherever they are, place an order, and based on their tiering level, they get the necessary discount, and then they make a payment directly using our payment apps to Huiyuan. So therefore, saving a lot of financial resources in terms of account reconciliation.
Right.
Okay.
Now, when you create ecosystems like that, what is the prospect of competition coming in? In other words, another peer-to-peer lender also being well-funded and so on, going after the same ecosystem that you have, and then creating another risk, which is that these sectors become over-lent to as a result. What's the dynamics in China for this?
We need to remember one thing. China is a huge market. We are talking about the internet population that's active on a daily basis, estimated at 730 million people. Okay, there are thousands of supply chain
networks that are still not being
developed.
But yeah,
what we have assessed is there will be competition. Okay, what is important for us to keep ourselves relevant and keep our proposition attractive is I've told my team, you need to help to address or resolve the pain points of your target customer. That's most critical. Let's understand what the customer needs are. Let's design a solution around the customer needs. Very often, in the traditional financial institutions, okay, unfortunately, traditional banks, unfortunately, are not able to deliver that.
Right.
I give you just one simple example. Just remember, when was the last time you walk into a bank where you need to sign off for the same account application, sign off in multiple places for doing one transaction?
Right.
Okay. Now, in the context of offering a fintech solution, we are making the whole process simple with a punch-in password, one single password.
Right.
We will not expect a user to punch in multiple passwords for the same transaction.
Okay. You mean you don't have dual factor authentication and so on?
We do if it hits a new threshold level. But even at two-factor authentication, maximum 2 times.
Right.
Okay?
Okay.
Not beyond 2 times.
Okay. The new regulations in China that are coming into place to finally create some discipline in this marketplace, how have you fared against that new regulation? Actually, some of that regulation is designed to sieve out, things like Ponzi schemes, governance issues, and so on. Now, how have you fared in the context of the new regulation, and how do you think you need to configure your business to make sure that that it falls within regulation today?
Yes. The first thing to remember is I'm a public listed company in Hong Kong, so I have an obligation, number one, to make sure that everything that I do is relevant and in compliance with all the regulations in the different jurisdictions that I operate in. Point number one. And so with that in mind, in the context of China, fortunately one of our subsidiaries, Wangxing, is a permanent standing member in the National Internet Finance Association, founded by PBOC in 2016 March. All right. As a permanent standing member in that committee, we are helping to the regulators to design new policies for the industry. We are actually sharing the industrial knowledge and experience in helping to craft out policies. Now, there were only 4 institutions or 4 companies in China chosen to be the permanent standing member in the National Internet Finance Association. Okay, so I think that gives you a good flavor as who we are. And the second dimension is, as a fintech group, I've told my team, I've told my board, it is important to be prepared for regulatory changes, because the fintech industry is still relatively new. Okay, now the policies, the governing policies around it is not fully developed. So unlike the regulations across around a bank, where it is very matured, okay, for the fintech space, we need to be prepared for evolving regulatory changes. And one of the competitive advantage of CCF today is we have the mindset to be continuously adapting to new regulatory environment.
Okay. What are next steps for Credit China? What is the next breakthrough that you are looking at in order to scale the business? Or is it a time for consolidation, because there are lots of questions on the credit quality that's being generated in the marketplace right now, and it is entering a phase where even the economy in China is softening in that regard.
Fully agree. Therefore, in preparing for that, over the last 3 years, the board and myself have actually created a business that is of multiple revenue streams. Okay, today I have 6 revenue streams. First, starting from the traditional lending business. The second stream of business is from payments. Third revenue stream is online wealth management. The fourth revenue stream is online lending. The fifth revenue stream is coming from social gaming. And the last revenue stream is coming from blockchain technologies. Now, out of the 6 revenue streams, 5 of them are more than 100 million renminbi worth in 2016. Okay? Now, it is my goal, and the board have given mandate for the executive directors to build 2 more new revenue streams in the coming 2 years to expand, to broaden and strengthen our revenue stream coming in.
But on the back of retained earnings, or on the back of new
retained earnings. So that's one part. So just imagine we are one fintech group with multiple revenue streams. At any one time, if we run into policy changes in one particular area, at least as a group, the revenue remain fairly consistent and growing. The second thing is, it is then my goal to build each of these revenue stream to turn it to become more than 100 million in terms of profit per revenue stream. And that's what I'm working towards with the team. All right, so that is one aspect of things. Now, coming back to the question of how we intend to grow our business and our goal in 2017, basically 4 top targets, simple targets. 2 more new revenues,
right.
2 more new markets,
right.
in 2017. All right, and I hope my organic business, things that is already within the group, will be the core growth engine. Okay, that means the core growth in 2017 must come from organic business growth. And the last thing is, I'm looking to deliver across all simple KPIs to be at least 30% growth in 2017.
So that's a healthy, so you figured out the 30% compounded annual growth for the foreseeable future.
For now, because I give you an example. Third-party payment volume growth across the country in China alone, it have grew from 2015 a 12 trillion renminbi volume to 2016 a 20 trillion volume.
And it's not even banks. This is just
a third-party payment,
yeah.
And it's growing at 64%.
Yes.
Okay. Now, so when we talk about fintech, there are very many different areas of fintech. but I think we are privileged and to be in the right place at the right times, doing the right things. And so we are riding with the wave, and therefore I hope the team can take advantage of this current environment to grow at least not slower than the market trend growth.
It's an amazing story. There's a lot of moving parts, and we could have actually zeroed in on any one of them, and that would have been another 1 hour worth of interview. So we would like to continue tracking how you're evolving and be able to tell your story in the next few years. So it's been really a pleasure speaking to you today.
Thank you, Imelda. Yeah, thank you.
Good. That's as much time as we have to do, to capture an essence of your business for now. That's a lot of moving parts, and I hope that we'll be able to continue catching up with you to see what you've been learning and how you've been creating and how you've been responding to how this amazing industry is evolving and the country itself is evolving in the next few years. Really good speaking to you today.
Thank you.